Hey traders, let's see here. TLRY, Nick Shaheen, reviewing TLRY. This is a stock that I got lucky with when it went ballistic, and my method was to sell puts in it, and I did, and they were winners, although they were pretty tough to close on during this period of time because the frenetic way it traded, even the winners were hard to close, believe it or not. So anyway, besides the point, what now? It's been in the news, it was up and down. First of all, I'm not debating whether it's worth it or not. This is clearly an expensive stock, something along the lines of whatever the market cap, 6 billion at some point, one point or another, and versus like 20 million in sales. But the potential is there, and we don't know what the potential is. Therefore, you can't kill the thesis that it could grow into it. We don't know. I don't know. There are experts that claim they do. I doubt it. But anyway, let's look at the chart. This can't tell me anything. Too big. So I'll go down to 120 minutes. So 2-hour bars. All right. So I can see there's a whole bunch to be done here. Levels to point out are, first of all, we have a tightening range. So the range went from here to here. So the stock was doing this basically, and now to a pinpoint. Something's got to give. Where it did the pinpoint is not a surprise. That's where price wants to be. That's where most buyers and sellers see it there-ish for the short period of time. This is short period of time, days, not months or weeks. So if I were a trader, what do? First of all, I see a box, and the box is like right here. And so it's basically this box right here versus this zone right here versus the potential of the upside. So you've got the bears, even, and the upside potential. Where to go from step 1 to 2, it depends on what you want. First of all, I see a tightening like pinpoint. Something's got to give from here, boom or bam. Depends on what you think it's going to do. But levels wise, immediately 82.5.6-ish. Maybe these candles right here, 82. Let's round them out. 82 or lower would gather sellers. More importantly, 79.1-ish is important to hold. If not, then you look at this doji-ish candle right here, and the wick of it was 77.5, which brings us to a pivot point. If you think about it, 77.5 was a battle zone here, failed, here, won. If it comes back, I'm not calling for it, but if it comes back, that would be an area I would look at, 77.3, 0.5. But the battle is inside the box, and the two combatants are the bulls that want it here and the bears that want it here or lower. So the upside scenario is, if I'm looking at it, what is that, 87.9? Let's call it this one, scene of an accident, just to be conservative. If I was looking to chase it and I want to put a trigger to alert me, it would be somewhere around here to chase the upside, whatever it is. The wider, relatively speaking, on short-term candle would be somewhere around here. So here are the two scenarios that would trigger whatever levels you have. There are minutia between those two, but for most people, if I was to swing trade it, that's probably what I would look at. If I was day trading it, I'd probably have to look into these little candles here and go down to a 5-minute chart maybe. So I'll have more granular levels to shoot from. Like, see, the lines I just drew disappeared because this is one here and the other one was above that. So let's undo that. All right, so, and this is another level right here to look at because that would bring that pivot level there. So there is a lot to be said, but I have to look at what happened before and what's happening now. An eyeball, if I draw, what was that? Hey. I was discussing it earlier with somebody, so which brought me to, hey, maybe I should do a video on that. So this I haven't discussed yet. So this is a move. If I slice it in half, it's about where it's at, right? And this is a move. If I slice it in half, it's where it's at. So they keep coming back to fair. So this is where the battle lies. How do I trade this? Boy, that's a wild one. So if you can stomach selling puts and put spreads, the premiums are huge. But you have to be able to buy it if it falls through, if you're selling puts. If you want to buy calls and it goes the other way, one day it's up 20%, the next day it's down 20%. So it's not for the faint of heart. However you trade it, but you have to know the levels. If you're trading it on emotions and when it hits the news on CNBC, you're buying somebody else's profits. So there's no way I could trade it without knowing the levels. Like here, there was an inverse cup and handle. If somebody chased it, they made some money. But you have to know the technicals, you have to know the levels, and you have to know ins and outs. So if I start to chase it here and it goes against me, I should have a stop. I should say, okay, if it goes below this, I should be out. And if it does go below this, I should get out. I don't say, oh my gosh, what if it turns around? So what if it does? You did the right thing. You have to do it over and over. Otherwise, you get stuck. Nick signing out. This again, I have nothing against it one way or another. It's an expensive stock, but it's a tradable stock. But you have to know the actual levels.